Pi Network price drop. Shocking decline and what's really happening. The Pi Network price has just taken a massive hit, and pioneers everywhere are in shock. In the last 24 hours alone, Pi's value has plunged 4.96%, and over the past week, it's down a staggering 32.59%. But why is the Pi Network price crashing? Is this just another crypto dip? Or is there something bigger happening behind the scenes? Today, we're breaking down the real reasons behind the shocking decline, the latest updates on the Open Mainnet launch, and whether Pi Network can still recover and surge back up. But first, I have a question for you. Do you think Pi can still hit $10 in the future? Drop your answer in the comments. And if you missed my previous Pi Network updates, check out the latest videos, link in the description below. Also, show some love and drop Pi Network to the moon along with your country name in the comments. Let's see where all our amazing pioneers are tuning in from. Before we jump in, make sure to like, share, and subscribe to support the channel. This helps us bring you even more updates on Pi Network and the latest crypto trends. Disclaimer: this video is for entertainment purposes only, not financial advice. Always do your own research before making any investment decisions. Alright pioneers, let's get started. The Pi Network community is buzzing with concern. The price of Pi has taken a hit, now sitting at $0.987 as of March 22, 2025. That's a sharp 4.96% drop in just 24 hours. Even more alarming, Pi has lost a staggering 32.59% over the past week. For many, this unexpected downturn has raised pressing questions. What's behind this price drop? Is it just another phase in the crypto cycle, or is there something deeper at play? For weeks, Pi had been relatively stable, hovering around the $1.50 mark, but now, in what seems like an instant, the floor has crumbled beneath it. Investors who were expecting a steady climb or at least a stable hold are now left wondering what changed. This isn't just a Pi-specific issue though. The entire crypto market is taking a hit. Bitcoin and Ethereum, the titans of the industry, have also faced substantial losses. That tells us one thing: broader market forces are influencing the current downturn. Crypto is no stranger to volatility, and seasoned investors know the drill. Prices swing wildly due to a mix of macroeconomic conditions, regulatory changes, and investor sentiment. The current downward trend aligns with global financial uncertainty. Inflation is rising, interest rates are climbing, and riskier assets like cryptocurrencies are being dumped in favor of safer investments. It's a domino effect. When Bitcoin sneezes, the entire crypto market catches a cold. Since most altcoins, including Pi, are directly or indirectly tied to Bitcoin's performance, any decline in BTC drags the rest of the market down with it. Adding to the turbulence is the ongoing regulatory uncertainty surrounding cryptocurrencies. Governments worldwide are still figuring out how to regulate digital assets, and the lack of clear guidelines is making investors nervous. Some hesitate to commit capital when they're unsure of future regulations that could impact their holdings. This uncertainty alone is enough to shake market confidence. Another critical issue facing Pi is accessibility. Unlike major cryptocurrencies, Pi is not yet listed on major exchanges like Binance, Coinbase, or Kraken. This severely limits its exposure and trading volume. Without access to these major platforms, many potential investors simply can't buy Pi easily, restricting demand. Even those who do hold Pi face liquidity challenges, making price manipulation a bigger risk. A few large transactions on smaller exchanges can send the price soaring or crashing in an instant. The Pi core team has acknowledged this issue and has stated that exchange listings are on their radar. However, getting listed isn't a simple process. Exchanges have strict requirements, including security audits, regulatory compliance, and significant community engagement. Until Pi secures a listing on major exchanges, its price will likely remain unpredictable. Increased accessibility through major listings could be the game-changer Pi needs to stabilize its value and attract a wider investor base. Then, there's the ongoing KYC bottleneck, one of the biggest roadblocks to mainnet migration. Pi's KYC, Know Your Customer verification process, is essential for preventing fraud and ensuring regulatory compliance. However, it's been a frustrating experience for many users. The verification process is slow, leaving thousands stuck in limbo, unable to migrate their mined Pi to the mainnet. The issue lies in the manual nature of the verification process. Every single user's identity documents must be reviewed, and with millions of pioneers trying to verify their accounts, the backlog is overwhelming. Until KYC is streamlined and automated, Migration delays will continue to be a headache for the community. This uncertainty around circulating supply, how much Pi is actually available for trading, adds to price instability. Some users, frustrated with the delays, may decide to sell their Pi out of concern, further impacting its value. So where does Pi go from here? Despite recent setbacks, Pi's long-term potential is far from dead. Several factors could drive a turnaround and position Pi for future success. First and foremost, the open mainnet launch is the biggest catalyst. If executed successfully, it could restore confidence in the project and prove that the team can deliver on its promises. A fully functioning mainnet would unlock new possibilities, increasing Pi's utility and demand. Secondly, real-world adoption is key. If Pi can secure partnerships with businesses and service providers, allowing users to spend their Pi for everyday transactions, it will shift from being a speculative asset to a practical currency. The more utility Pi has, the more valuable it becomes. Regulatory clarity is another factor that could influence Pi's future. If governments establish clearer guidelines for cryptocurrencies, it could open the door for institutional investors who have been hesitant due to legal uncertainties. More institutional involvement means greater credibility and liquidity, which can drive up demand. And of course, major exchange listings would be a game changer. Once Pi gains access to platforms like Binance and Coinbase, it will become significantly more accessible to a global audience. Increased liquidity would reduce price volatility, making Pi a more attractive investment. Pi Network is at a crossroads. The challenges are real: price drops, exchange limitations, KYC delays, but so are the opportunities. If the core team can address these key issues, communicate transparently, and deliver on their roadmap, Pi has a strong chance of bouncing back. The journey ahead won't be easy, but for the pioneers who have stuck with Pi from the beginning, the potential rewards could be worth the wait. Now the big question remains, can Pi Network rise to the occasion and prove its worth in the ever-evolving world of cryptocurrency? Wow, what a deep dive into Pi Network's recent price drop. If you found this update valuable, don't forget to like, share, and subscribe to support the channel. Thanks for watching, and I'll see you in the next video.